Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Thursday, 20th day of May, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. And that will give you one-click access to the show each and every day. It also gives you access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of the office, away from your desktop, not to worry, point any internet connected browser to cfrn.net/live, and there you'll find a live real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live each day on our YouTube channel, which is easy to remember, youtube.com/CFRN. Not only do we stream live, but we archive each and every daily show. We now have over 1,700 daily shows archived there for your viewing and educational pleasure. So let's open with a word of prayer. Heavenly Father, we thank you for your blessings, for your mercy, for your grace. We thank you for hearing our prayers, feeding us with your word, and encouraging us as we gather together here each day. We pray that you would take our lives and use us to love and serve you and all people in the power of your Spirit and in the name of your Son. We are created by your power, redeemed by your love, strengthened by your Spirit. We give ourselves into your service. May we love you and love others with all of our hearts. In Jesus' name, amen.
Amen.
All right. Happy Thursday, guys. Hope it's a happy Thursday wherever you are. Let me give you the numbers from around the world. These are the cash markets, the indices. Starting in the U.S., the Dow's up 242 points. NASDAQ is up 208 points. S&P 500 is up 42. And the Russell 2000 up 8. Now for the Dow, that's a gain of 0.75%. The NASDAQ, that gain is 1.5%. The S&P gain is a little over 1%. And the Russell's bringing up the rear. In the commodity basket, crude oil down 35 cents, trading 63.01 last. Gold down $1.30, trading 18.8020 last. And silver unchanged on the session. In the Asian markets at the close, Nikkei posted a gain of 53 points. Shanghai dropped 4. The Hang Seng fell 143. And in the European markets at the close, FTSE up 70, the DAX up 256, the CAC up 81. Now, for the DAX, that's a gain of 1.75%. And for the CAC, that's a gain of 1.25%. And the FTSE, that's a gain of 1%. So that gives us a mixed day in Asia with some light trading, green day in the UK on some strong trade, and it is a big green radio Thursday here in the US of A. So let's go to Michael and get a recap of what happened this morning in the live trading room. Then I'll come back. We'll go over the logic alerts, the concierge trade alerts, all that in answers to your questions. And today's Thursday, so Dr. Tom will be joining us during the broadcast. Michael, I can see your screens.
Okay.
It's all yours.
Excellent. All right. Here we go. Good afternoon, everyone. Today is Thursday, the 20th day of May, 2021. All right. If you've not taken a free trial with us, then go to the homepage at cfrn.net. Just look at this one more time. Okay, go to the homepage at cfrn.net. On the homepage at cfrn.net, scroll down to where it says free 5-day trial, no credit card required. Click on that and you'll be brought to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent the confirmation link. You must click on that confirmation link, okay? If you don't click that confirmation link, we don't know that you took the free trial. All right, so you gotta click on that link. All right, now the results. If you're gonna read the spreadsheet, you gotta read all the CFTC risk disclosures down at the bottom. This spreadsheet goes back to January 2nd of 2013 with our daily results. Okay, today was a pretty quiet day. As you can see, if you can read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. I don't know if I said that already, but I have to say that. Today is the 20th day of May, 2021. Made 17 ticks in crude, 5 ticks in gold. Is that right? Yeah. And we were break even. We didn't even take a trade on the ES. It was so quiet this morning. It really took off after the room closed, though. So we're plus 220 on the morning session. Today it took 10 minutes and 3 trades to get to the goal for the day. We're at 120 at that point, and we took a total of 13 trades. So we had a bunch of break-even trades today. We had 1, 2, 3, 4, 5, 6, 7, 8. Actually, not that many. 5 break-even trades. I guess out of 13, that's quite a few. But on the month now, we're at $7,707. That's over 14 trading days, averaging $550 per contract per 2-hour trading day. We've now gone 95 out of 96 days so far this year, getting our goal. And that puts us at $70,740 a contract. That's over 96 days, as I said. Averaging $736 per contract per 2-hour trading day. That's 1 contract, 2 hours a day. Okay? Okay, let's get into what we did. Now, most of the action was in the beginning of the session. Okay, it was right in here. I don't know what that's for, but I'm going to delete it. Most of the action was right in here. On gold, our first trade was right here. It was a momentum long trade. We ended up taking 1 tick on that. We had a horrible entry. We would have taken more. The next trade on gold was right here. We picked up 11 ticks on that, and that's where we got our goal for the day. At that point, we were up 12 on gold. Then we had, looks like a break even. You know, I was putting these levels up in here on gold and down here and up there. And gold was behaving pretty well today. Okay, it was going pretty much where we wanted it to go. It did a lot of pullbacks and stuff. It was doing all right up until after the first hour. All right, we had a break even there. We had another +1 there to put us at +13. Then we had a break even there, and then we just didn't have anything to trade with, right, all through here. Okay, that's almost an hour in there. Then we stopped out on this one, and that was the end of it for the morning session. During the break, there was a nice bounce off the BBC right here, and a follow-up trade right there. All that going into the high of the day. Now, this was the level that I was looking for way over here. And you can see it got up to that one, and I'm sure I would have had another one for you if I were watching it at that time. But that's where we went in the morning session, or that's what we did in the morning session with gold. Okay, there was this one and this one during the break. Now, remember, you only need one of those to get the goal for the day. And yeah, and that was it. All right, so on the crude right now, we have a break even right here. We had a break even right there. And you see, I was putting in the levels here on crude. It was doing pretty well about getting to the levels there too. So we had break even there. Then I believe we had a +1, then a break even. Then we had 5 more to get us to +6. Another break even, a mistrade, another mistrade, another mistrade. Then a +10 to put us at +16. Okay, and then a +1 to put us at +17. And we had a mistrade right there, and you see, crude was doing pretty well about getting to the levels as well. It was just taking its sweet time getting there. And that was where we ended trading. I mean, it just got really choppy and sideways in here, and we didn't have all that much opportunity. Now the ES was just a bore all day long until the break. If we go right back here to the beginning, we didn't take any trades on the ES, so I mean, I hardly have anything outlined because it was just nothing happening. It was just choppy all day. Got up to the weekly trading zone, consolidated, went sideways, went sideways, went sideways, moved up. This was a very slow grind up right here. Didn't really give us anything. Moved back down, moved back up, came back down. Then we finally had another slow grind right here. And again, another slow grind. And I was putting areas in. It was taking its time getting there, but it did eventually get there. And then finally, we ended the morning session. I put in these levels. It cut to all those levels, and then it took off right up to the weekly trading zone right as we were ending. And during the break, it had, well, these were all going into the high of the day right here. So it really didn't have much. It would have had a long right here, a long right here. But these momentum trades are going into the high of the day. Wouldn't have been good. Then it ran right back down to the weekly trading zone and gave a short right here, and then it went sideways. And that was it. That was it for the ES on the morning session. We didn't place a single trade this morning, and that is really unusual for us. Anyway, we're back to the spreadsheet. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 20th day of May, 2021. Today we made 17 ticks in crude, 5 ticks in gold, and we didn't even place a trade on the ES. Put us at +220 on the morning session. Today it took 10 minutes and 3 trades to get to the goal for the day. And at that point, we're up $120 a contract, and we took a total of 13 trades this morning. So on the month now, we're at $7,707. It's over 14 trading days, averaging $550 per contract per 2-hour trading day. All right, we've now gone 95 out of 96 days in getting the goal, 65 consecutive days, but 95 out of 96 days getting the goal this year. And that puts us at $70,740 a contract on the year. That's over 96 trading days, averaging $736 a contract. All right, that's 1 contract, 2 hours per trading day. All right, so with that, we can pass it back out to fabulous Phoenix, Arizona. It's Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Okay.
Okie doke. All right. So far this week, Logic 247. Logic is our around-the-clock, 24/7 Emini alert service. It's not just the E-minis. We also alert on crude, gold, silver, occasionally some ag products, occasionally some currencies. Pretty much the 4 major indices and the other ones mentioned. On any average given week over the last 146 weeks, we see 20% of our alerts stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and a very simple 3-step process that we teach all of our traders. In the live training room, when Michael is teaching you the underlying strategy, he uses an 8-tick hard stop on every market, on every trade. What he's teaching you is the good habit of always having a hard stop in place. So it's 8 ticks across the board. However, as you move into the alerts and into larger time frames, we actually take a look at the structure of the market, and because each trade is a unique moment in the market. We apply a unique stop loss for each trade, not to exceed $300 per contract per trade, but less when possible, using market structure and the three-step process. Now, this channel opens for business Sunday night at 6 p.m. Eastern. That's when the first alerts come out. It's all through Sunday night, all day Monday, Tuesday. These alerts come out around the clock as opportunity presents itself, right up until the market closes Friday afternoon at 5 p.m. Eastern. You know, trading stocks is looked at as sort of a 9:30 to 4 Monday through Friday type of job. Futures, one of the things we love about it is the fact that we can trade around the clock. So for those who are trying to learn how to trade and still have a day job or have a night job, the market's always moving. There's always a trade setting up somewhere in some market. And once you understand our basic methodology and strategy, you can apply that to any market, to any time frame. Everything we teach is fluid across all markets, all time frames. So far this week, we've issued a total of 38 alerts. 2 of them never triggered. Still waiting on the results of 2. We've had 34 actionable alerts. And so far this week, 6% stopped out based on that $300 risk profile that I mentioned. Now, the actual alerts themselves look a little something like this. This is the alert channel. Okay, this morning we had an alert on the NQ. This was alert number 7,454. The market was the NQ. The instructions were to buy 13,490, and then the profit target was only 10 points because 13,500 is a weekly trading zone. On every alert, if it's a long, if you're buying the market, the trade to target is going to be the weekly trading zone above, as in this case. Now, those 10 points, the NQ pays $20 a point, so that was a $200 per contract trade. If you've earned the right to trade 10 contracts, it was a $2,000 trade. But do not put the cart before the horse, because that's awkward for the cart and the horse. You start in SIM, you put together 10 consecutive days in a row with us before you go live. Once you've put together those 10 consecutive days, our blueprint will give you the green light to go live with 1 contract. Now your goal is to increase the cash balance of your account by $2,000. Once you do that, you'll get the green light to go live with a 2nd contract. The difference between the 1st and 2nd contract, not only does it double your income for the same amount of points, but you're funding the 2nd contract with profit you earned in the market. So you'll trade 2 contracts until the blueprint tells you it's time to add number 3. You'll add number 3 with profit you earned in the market. Same with number 4, number 5, number 6, number 10, number 15. Depends on how big you want to trade. Okay, a lot of traders find a comfort zone around 5 contracts, because 2 points out of the S&P or the Russell, or 10 ticks out of crude or gold, or even 5 points out of the NQ, it's $100. But once you've earned the right to trade 5 contracts, that's $500 a day, and for most people, not a bad living. By the time you earn the right to trade 10 contracts, which will take a while because there's no overnight riches, well, that's $1,000 a day. The other alert this morning was the Dow to be long, 34,135. Initial target, 34,155. The initial target will always cover that $100 daily goal, with the exception of the NQ, because it's so volatile, $200. The initial target is 200 on the NQ. Everything else, the initial target's 100. And then the final trade to target, of course, will be the weekly trading zone overhead. And as we know, the markets are still climbing. The number that you see in parentheses, When Valerie comes through and does the recap, she notes where the current swing high or swing low is based upon whether it's a long or a short trade. So that's simply a point of reference. When we go to the charts here in a moment, we'll see where the Dow actually is right now. On the S&P, the alert was to be long 41.43, initial target 41.45, up to the weekly trading zone at 41.52/53. From 43 to 52, that's 9 points. At $50 a point, that's $450 per contract traded. Now, once you put in the time, do the work, learn the strategy, and earn the right to trade 10 contracts, this $450 trade becomes a $4,500 trade. Simple function of math. Still waiting on the results here. We had a hedge on silver to be long, which just has not triggered yet. We had a short on silver. We had a stop out on gold. We had a long on crude oil. Had a long on the Dow. Short on silver. Short on gold. Short on crude oil. Long on the NQ. No trigger yet. Long on the S&P. Long on the Dow. Short on the S&P. Long on the NQ. This was a long on silver and a long on gold that haven't triggered. Short on silver. Long on gold. Short on crude oil. Short on the NQ. Short on the Russell. Short on the Dow. Short on the S&P. And that brings us all the way back to Monday, where we had a long on crude oil. We had a long on the S&P. We had a no trigger on this S&P. Now we're back to Sunday night. Long on the Dow. Long on the Russell. Long on silver. Long on gold. Long on crude oil. Long on the NQ. Long on the Russell. No trigger on the Dow. And a long on the S&P. So this was the first alert that came out Sunday night at 6 p.m. Eastern. Many of our traders will reach their goal for the day Sunday night before, Monday even officially gets underway with the Wall Street Open. Globex opens at 6 p.m. Eastern, and then Asia opens, and then at 3 a.m. Eastern, London opens, and then at 9:30 a.m. Eastern, Wall Street opens, and futures track the buying and selling of stocks around the clock, following the sun around the globe. Last week, which was week 145, we had a total of 67 alerts, 2 never triggered, 65 actionable, 5% stopped out. Now, that is not a typical number. The average is 20% on any given week, on average over the last 146 weeks. Now, I know that many of you have tried a lot of different methodologies and strategies for learning how to trade. Maybe it involved watching videos or reading through PDFs. We do things a little bit different. We teach live, in person, every morning for 2 hours every trading day. From 9:30 a.m. to 11:30 a.m. Eastern, Michael is in the live training room, taking off trades and explaining everything that he does every step of the way. If he's going long on crude, he's talking you through it. If he's going short on gold, he's talking you through it. Whatever the trade is, whatever he's doing, and you are encouraged to ask questions. People always ask, how long will it take me to learn your strategy? Well, all people learn at different speeds, but the more involved you are, the more you interact, the more questions you ask, the sooner you will get there, because the strategy is very simple, and at some point you'll simply run out of questions. You'll have asked every question, and the answers to the questions never change. Our strategy, our methodology, our indicators, nothing has changed in over 8 years, 9 years. The answers to the questions haven't changed because the market operates on some very simple, basic underlying principles, and that's what our strategy is based on. And unless the underlying principle of how markets work somehow changes, our methodology and strategy will never change. It's really that simple. Now, this does make it look easy, but trading's not easy. It can be simple, but you need someone to show you how to make it simple, because most groups want to show you how complicated it is so that they can sell you lots and lots of indicators and oscillators and seminars and, workshops and all that jazz. And that's also why 9 out of 10 new traders fail. That is a statistic published by Futures Magazine. That was published in 2006, and the statistic has not changed. In fact, it may have even gotten a little worse. Now, inside the walls of CFRN, those numbers do not hold true. Why? Well, I just explained. Not only do we train you live every morning and every Thursday night in the members only workshop, but we literally hand you trades one after the other around the clock. And so, as you're learning the strategy, you should be trading along with Michael in the room. And when an alert comes out, you go into your demo account, into your simulator, and not only do you trade the alert, but if you study the alert and study your chart, you'll learn to start spotting these windows of opportunity yourself. Because our goal for you and your ultimate goal should be that you reach a point where you never need anyone to tell you when to get in or when to get out. Everything we do is based on pure logic. Once you understand how price flows, then logic becomes common sense. Now, we have a second alert service. It was actually the original alert service. Those are called the concierge trade alerts. Here's how they differ from the logic alerts. The logic alerts are based on current price action, what's happening right now. Keep in mind, though, even on the logic alerts, you have plenty of time from when the alert is issued to get to your computer, to study the chart, study the alert before it triggers. Okay? You'll have at least 20 minutes to sometimes 2, 3, 4 hours before it triggers. So you don't have to trip over your feet trying to race to the computer. All alerts are issued well ahead of them triggering. So if you can hear the alert, go to your computer, and follow the instructions in the alert, you'll find that the learning curve quickens pretty quickly. Okay? And we have around-the-clock support in our Telegram app. Okay? If you're on the trial and you have not downloaded and installed the free Telegram app, you're missing out, because in Telegram, not only do we publish all of the alerts, but we have our discussion group, which is open 24/7, 365. So if you have a question at 2 a.m. or 2 p.m., you can post it in the discussion group and get an answer. And you'll meet all of our other traders who are learning the exact same methodology and strategy that you're learning. Some of them have been at it for a couple years or longer. Some are brand new, just like you. You'll meet some very nice people. Now, the concierge alerts came out last night, 15 minutes after the Globex Open. If you want to grab a screenshot, you can, because we're going to take a walk through these and see exactly what would have happened if you had your Telegram installed and you were trading these alerts last night. Okay? All right, got your screenshot? Good. Let us jump to the daily chart. That's where we're going to start. Every day we start with the daily chart. every trading session, I encourage you, whatever market you trade, start with the daily. Okay? That gives you a big picture look at where the important prices and important areas are. Price flows on this daily chart exactly the same as it does on a 1-minute chart or a monthly chart. From support to resistance, back to support, back to resistance, back to support, back to resistance, over and over, again and again. It is a never-ending cycle. Now, our weekly trading zones, those act as fixed support and resistance for the entire week. They're published Monday morning at 6:15 a.m. Eastern. We have published the weekly zones every week since December 14th of 2009. So once they're published, you get the zones on your chart, and again, that's your fixed support and resistance. The indicators become your dynamic support and resistance, so that you're able to clearly see where support is, where resistance is. When you understand that dynamic, when price is on its way from support to resistance, you simply step in and take the trade. Once price finds resistance and reverses to go look for support, again, all you have to do is step in and participate in the move. It's not easy. If it were easy, everybody would do it. But when you have a live instructor, when you have access to unlimited one-on-one mentoring and the daily training classes, it really can be simple. So the important numbers to be aware of. This green line we call the BBC bull-bear cross. When price closes above that green line, we're bullish and anticipate higher prices. Once price closes below the green line, we're bearish and anticipate lower prices, higher prices. We touched the BBC on March 25th, and we did not touch it again until May 4th. Now, the pullback to the BBC holds more often than it doesn't. That's very important to remember. Now, there will be times when it doesn't hold. That has to happen, otherwise we'd end up with a sideways, stagnant market, range-bound, virtually untradeable. But the purpose of going to the daily chart, whether you start trading in the morning, the afternoon, evening, middle of the night, go to the daily and identify where major resistance is. We can clearly see that the high of today, which is 41.64.5, that's going to be the first major resistance. Next will be, we've got a little bit of a triple top going on right here. This is the daily chart. So if we take out today's high, then yesterday's high, which was 41.79.5, that becomes the next area that you should expect major resistance. Now, we find minor support and resistance areas on the smaller time frame, but the larger the time frame you look at, the more important these numbers are. So as I said, we've got a bit of a triple top right across here in this 41.78.79 area. If price can break above that, then there is no obvious obstacle on the way to the all-time historic intraday high at 42.38.25 and the all-time historic closing high, which is at closing high 42.26.75. Okay, now the flip side, buyers got us back above the daily BBC. Okay, but now we fell off. When we pull up to the BBC, we expect that to be good resistance until proven otherwise. When we drop down to the BBC, we expect that to be good support until proven otherwise. So all three of the indicators, the BBC, the CFMA1, and the step line are all gathered together right here. Okay? And so as long as price stays above it, this grouping is major support. If by the end of the session we find ourselves below those three major, or those three indicators, then where would we look for support? Well, we came down and touched today the 38% Fibonacci price retracement of the last leg up. That's from the low put in on March 25th to the high put in on May 10th. Here's the 24% fib retracement. Here's the 38% fib retracement, which we came down and touched this morning. And this bounce that we saw, which started back on the 13th, that's because price came down and tagged the 50% fib retracement. Now, funds, institutional traders, deep pocket traders, they watch daily and weekly charts the way you and I might watch hourly and 30-minute and even 5-minute charts. When price hits a 50% fib on a daily chart, you can almost always expect there to be a very nice reaction. And a nice reaction we got. From 40.40 we bounced all the way up to 41.80, 140 points at $50 a point. And then we put in that 3-day triple top, which sent us back below the BBC. Buyers came in early because any traders who missed this 140 point move, they don't want to risk missing it again. So as price nears that area of support, they will step in early and begin to drive price. Unfortunately, they're not doing such a good job of taking out these highs. But that's okay, because as futures traders, we don't care if the market's moving up or down. We just need it to move. Anything but sideways. Sideways, congested market, you need to stay out of. Our indicators do a great job of helping you find high probability, low risk trade opportunities. They also help you identify markets that are not suitable for trading because of the sideways congestion. So you simply have to be patient, exercise self-discipline, wait for price to move out of that consolidation, out of that range, and then look for the next window of opportunity. In fact, when you sit down to trade each day, you go to your chart and you start to identify where windows of opportunity are above and below based upon everything that I teach you about market structure and the three-step process. So long before price gets there, you've already identified the area, what you're going to do, how you're going to trade it. Then it's just a matter of exercising the patience and allowing price to get to that area so that you can execute your trading plan. Now, if price fails here at the 38, at the 50, we should get, obviously we got a nice bounce off the 38. When price closed yesterday and we opened last night, we came down briefly, touched the 38. That 38% fib bounced us from 40.87 up to today's high, which is 41.64, 80-point bounce. Okay, now if this bounce does not hold and we get back below that 38% fib retracement, you got potential support at yesterday's low, 40.55, then back to the 50. If we come back down and that 50% retracement doesn't hold this time, or bounces and then fails, here's the 62% fib retracement, which is just above this very important area right here. resistance, 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 resistance. 4 sessions and 4 sessions. We could not get through the area. Finally broke out, which led us to the new all-time historic high. Okay, so now let's go to the S&P 30-minute chart. Last night's CTA. If you didn't grab a screenshot, feel free. There you go. If you can capture silver down there. Yeah, there you go. All right. So the CTA last night for the S&P was to be long 41.15. Here's 41.15. The initial trade 2 target, or the trade 2 target, is the weekly zone overhead. On a long, always the zone overhead. Now, we had logic alerts to complement the CTA. The CTA is forward guidance for the entire session. The CTA is based on historic price action versus the logic alert, which is based on current price action. So we triggered at 41.15. We hit the target at 41.30. It took 1 hour to get there, a little less than an hour, 2 30-minute candles. That's 15 S&P points at $50 a point. So if your goal is 2 points a day and you're going to build your trading business by simply taking your 2 points a day out of the S&P and increasing the number of contracts as the blueprint tells you it's appropriate, well, here we go. Now, once price closed above this weekly zone, then our strategy says price is going to try to make it to the next zone. Price is always trying to get to a zone. If price is above the BBC, it's trying to get to the zone overhead. If price is below the BBC, it's trying to get to the zone below. And so, once we closed above this zone at 41.30/31, an entry on the open of this next candle, which was 41.33.5, call it 41.44, took us right up to 52. That's an 8-point move at $50 a point, $400 per contract traded. The yellow line is a previous weekly zone, so we'll go ahead and get that out of the picture. The CTA on the short side never triggered. Now the logic alerts, I already scrolled through those. If you're on the trial, you have access to every one of those alerts. Not after it happens, but before it happens, before it triggers. Every one of our traders was notified last night at 6:15 p.m. Eastern that if price made it up to 41.15, they should be long to 41.30. Trading does not get much simpler than that. 15 S&P points from the published entry to the published target. If you're struggling with your trading, if you've tried all kinds of systems and indicators and oscillators and stuff, if you're sick and tired of being sick and tired, if you're sick of blowing up accounts, if you've wasted too much time and treasure, let me just say it again. Trading's not easy, but it can be this simple. The instructions last night were to get long at 41.15 and take profit at 41.30. The market was very kind, kept going. Okay. Now, you'll notice that the step line is on the left side of blue and climbing. While 41.30 was the 15-point target, there was no reason to get out of this trade because the step line was still on the left side of blue and climbing. You can see right here, price is now attempting to cross over to the right side of blue and climbing. When that happens, the first red candle that closes below that step line, that's the official exit signal price. And so let's say this candle closes at the low, which currently is 41.43, then that becomes a 30-point trade. So you can exit at the posted target, or once you understand how to read this chart, you can stay in until you get the exit signal. On the Dow, the CTA to go long last night was 33,872. Now the trade to target was 34,015. So from 872, from 33,872 to 34,015, we're talking 25, 35, 40 points, $50 a point. No, that's not right. Let me just do the math. Alexa, 34,015 minus 33,872.
Sorry, I don't know that one.
Alexa, 34,015 minus 33,872.
34,015 minus 33,872 is 143.
That's 143 points from the published entry to the published target. Alexa, 143 times 5.
143 times 5 is 715.
All right, this is a $700 per contract trade. It kept going. There was no exit signal. You could have gotten out at the published target, or you could wait for the exit signal to develop. Okay, right now the step line still has not crossed over to the right side. Next is the Russell. Okay, the CTA on the short side for the Russell was 2174. We put in a low at 2170.2. So basically 3 points, $50 a point, $150 per contract traded. Here, 2198, we got a swing high at 2201. Basically a 3-point move. This initial move from 98, that one ran up to 99.8, almost 2 points. Okay, now the CTA can act like an iron curtain and reject price and send it in the opposite direction, or it can swing wide. What you'll notice over time is price behaves at a CTA the same way it behaves at a weekly trading zone. Only 3 things can happen at a weekly trading zone. The most likely thing is consolidation. Second most likely is rejection. Third and least likely is the slice. Here's the NQ. The CTA last night on the NQ was 13,327. And so the published target was 13,500. So we'll just say 330 for the simplicity of math. That's 170 points at $20 a point. That's $3,400 per contract traded. We've hit the target, but we have not yet got the exit signal. On crude oil, we had a drop from the trigger at 63 down to 62.05. That's a $1,000 per contract move. We triggered again. On gold, last night's trigger was 1877. There's $100 per contract traded. There's $150 per contract traded. Important prices, important areas are almost always tested. So once an alert triggers, you should anticipate that it is going to trigger multiple times. So far, we've made it from 77 to 84. That's $700 per contract traded. And then the very last one, silver. Okay, silver was to be short 27.74, and the initial trigger took us down to 27.67. So that's 8 points. 2 pennies is $100, so that's $400. We get back above the trigger, we do it again. This time we put in a low at 27.49. We'll call it 50. So that's 24 cents. It's $1,250 per contract traded. And then we triggered again.
Sir?
Now, yep, I'll be right with you, Dr. Tom. And we're getting ready to break out above the CTA here, possibly on the long side. So I got through all of the markets because we're on a short leash today. Dr. Tom, welcome to the show.
Hey, thank you. Sorry, I thought I was muted. I was calling somebody in the office here.
Oh, no problem. No, I just wanted to, because I won't have time to finish them up after we get through, because we've got that thing happening this afternoon. So, guys, if you have any questions on any of the alerts, just message me in the discussion group on Telegram, and I'll give you an answer, whatever the question is. So, Dr. Tom, good to have you with us. Should I send the screens over to you?
If you would.
Okay. Well, keep dope.
There it is.
It's all yours.
It took a minute for it to pop up.
Mm-hmm. Did you hit okay?
There you go. How does
There
it
we
look
go.
to you?
Okay, I can see Jailbreak, Get Your Money Out of Prison Part 2. I can see the other slides on the left, so I don't know if you want to blow it up full screen.
Yeah, let me try that.
Beautiful.
It looks good. It's not.
I can see
It's centered and
Jailbreak, Get Your Money Out of Prison Part 2. I can see the cash behind the cell door. So,
Under.
yeah.
Okay. Excuse me just 1 sec.
Sometimes most times your slides fill up the entire screen. So I don't know if there's some other setting, but I mean, we can see everything and we can see it clearly.
Okay, well, that's the most important thing then. All right, so I want to continue with what we were talking about last week, Jailbreak. And last week, we talked about all the reasons that you want to take the exit ramp, right? As far as your money that's tied up in various different types of plans, whether it's IRA, 401k, 403b, annuities, whatever. And the reasons we gave, just summarizing here, that there are a lot of dangers in them. I'm not going to go through that. If you want to see that, you can go to christianfinancialconstants.com and just look up the video of Jailbreak Part 1. But there are a lot of dangers in the plans, including inflation danger, including stock market danger. You don't want your 401k to become a 201k, and I think it's going to be worse crash than we had in 2008 when retirement plans dropped by 50%. And then, of course, there's the danger of confiscation. Okay. The other thing is, you already know this. You can make more money managing your own money. That's what you're here for. You're learning how to make money with your money. And if you have it in a retirement plan, you have some guy that's a hired gun. He doesn't care about your money like you do, obviously. And he makes money whether you win or lose. So he basically, on average, is making 4.5%, which sounds okay, except for inflation. Average is 5%, so you're actually losing money. So you should take control of what is yours.
Now,
instead
2%
of
of what he makes typically, even if you have a horrible year and lose half your money, he still gets his 2%.
Exactly, if it's a managed account and not on straight commission. So either way, they make more money than you do. Okay, because they make money if they win and they make money if they lose. So, I mean, isn't it better to have control of what is yours that you work so hard for, instead of people who don't care? So anyway, last week was all about, and the previous week as well, why take the exit. Today we're going to focus on how to take the exit with the least stress and the lowest cost, because there are going to be costs. But first I want to just talk real quickly about another type of prison that I didn't talk about last week, and I realized I should have. We talked about all the retirement plans and pensions, and the fact that almost everybody in this country, all of their retirement money, every penny of it, is in the stock market. And it's not smart to have all your eggs in one basket.
And most of it is being managed by money managers who've never traded a bear market.
Very good point. Because I always tell people, if you're looking for somebody to manage money for you, make sure it's somebody who's been through at least one bear market, because a lot of people just don't recognize it. They think that the market's been going up and up and up and up every year, so why won't it keep going up? But there's another prison, and we don't normally think of this as a prison, because at your bank, you put your money in, you can take it out whenever you want to, right? Wrong. Wrong.
That depends.
Wrong. Yeah, it's getting harder and harder to get your money out. First of all, banks have become very nosy about what people are spending their money on. When people wire money to us to buy gold, they're asking them all kinds of questions about why they're buying gold, why don't they keep their money in the bank, and I say, I don't trust you, bank. You're giving me 1%, you're lending the money out at 50% on credit cards, and you could go out of business. Thousands of banks have failed in this country. And if we have a really bad one, the FDIC will not be able to
make everybody solvent.
No way. Some are actually refusing to allow withdrawals, or telling people how much they can withdraw of their own money. And we're not talking about the $10,000 limit that they have to report to the government. Technically you could take out $15,000. Anything over 10, they're going to report. They call it an SR.
An SAR, Suspicious Activity Report.
There you go. So
now, you can get a cashier's check, but that doesn't solve the problem, because the only thing you can do with a cashier's check is go deposit it in some other financial institution where you've now trapped your money again.
Exactly. Really, the only way to do non-reportable financial transactions is buying gold.
Legal non-reportable financial transactions.
Oh, thank you. I should have said that. It's totally legal to buy gold privately. It's not reported any place unless you buy over $10,000 worth of most kinds of bullion. But when you're buying investor-grade coins, there's nothing required to be reported. And if you buy under $10,000 in bullion, you're good. But banks are actually telling people they can't withdraw money or can only do certain amounts. The same thing is true with wires. They feel like it's their own money, like they own your money. Well,
which they do.
They do, exactly. Why do they act like they own it? Because, as Dwayne says,
when you deposit your money into a bank, you no longer own that money. You've surrendered ownership to the bank.
Absolutely true. And I've done 2 videos on this. One's called The Bank of Gold and Don't Bank on It. If you go to ChristianFinancialConcepts.com, go to the video link at the top, and then just put the word bank in the search box. And the first 2 videos, maybe about 7 or 8 videos, they have the word bank in their title, but the first 2 are the ones you want: The Bank of Gold and Don't Bank on It. So who owns your bank account? Well, Dwayne's already given you the answer, so there's no sense taking the quiz. But most people think it's the account holder. Some people say it's the bank. Some people say it's you and the bank, or I don't know. But the fact is, it's definitely not you. When you deposit money in a bank, say $10,000, although it says deposit ticket, okay, it's not a deposit. Because if you're like me, I'm one of the 12 people in the nation that have actually read their bank contract. You don't own it. Your deposit is shown as a liability of the bank. Because they owe it to you. And the same deposit on the other side of the ledger sheet is shown as an asset of the bank. Now, they couldn't do that if it wasn't legal and if it wasn't true, because they have to send their financial statements both to the FDIC and on their statements that they produce for their stockholders. So it's absolutely true that you're loaning your money to the bank. You don't own it anymore. They own it now.
Now, in that same vein, kind of, if you believe that you should diversify your portfolio and have a certain amount in precious metals, if you buy a gold ETF or a silver ETF, you do not own gold or silver. That's the biggest scam I've ever seen. You own a piece of paper that is correlated to the current price of gold or silver, but that is a far different thing from actually owning gold and silver. So if you've been hoodwinked by some fund like GLD or SLV, go read the prospectus. It's buried in the middle. I exposed it on this show one day many years ago. Clearly states that when you give that the price of the shares of that ETF are simply a proxy for the price of gold. In no way, shape, form, or fashion are they required to take your money and actually go out and buy gold or silver. It's incredibly misleading. I think it should be criminal, but it's not. So, back to you.
It's real interesting, Dwayne, that you bring that up right here, because I was just interviewed on Pastor Greg's show this morning, and he opened it up by saying, all that glitters is not gold, and he was talking about the same thing, the fact that unless you own physical gold, you don't own gold. I've done this with audiences of thousands of people at the Christian Economic Conference. I'll ask, how many people here own gold? And probably 10% of the hands will go up. And then I say, okay, now take your hand down if you don't own physical gold, if you don't have possession of it in your own hot little hands. Only 2% of the hands are still up.
Mm-hmm.
Okay.
Mm-hmm.
Now that's changing. A year and a half ago, 2% of Americans did actually own physical gold. Now we're over 20%. That's very interesting to me. It means that people are on to what's going on both at the banks and in the government. Here's the reason this matters. It's bad enough to have an IOU to a bankrupt bank, right? That may or may not be covered by the FDIC. But you really don't want to have bank stock in a bankrupt bank, because if the bank fails and the FDIC is not able to cover it, it's part of the contract that your IRAs can be converted to bank stock under the new banking rules that were set up in 2012. It's called a debenture. So it's a loan that can be converted, usually at the request of the person who made the loan. But in this case, the person who receives the loan can change your loan into stock. That means your money is no longer protected by FDIC insurance. You can't insure stock. You can insure money, but you cannot insure stock. So that your cash in the bank can be legally wiped out, just as Lehman Brothers shareholders were in 2008. Their money was gone. There was no recourse. So why have banks started to resist or even refuse to give funds back to the deposit? And why did they ask these intrusive questions? Well, what are you spending your money on? Do you think that's a good investment? I even had one bank where somebody was wiring money to me, and they Googled me, right? Mm-hmm. And they said, well, we don't think you should wire money to this guy because he doesn't have much of a social media presence. Well, when you're in my business, can you imagine this? When you're in my business, I don't want to have a big social media presence because I don't want somebody coming out and hearing me have to use my shotgun. But I mean, they literally weren't going to let the guy send the wire because I didn't have a sufficient social media presence. So they're asking questions like, "Oh, are you going on a cruise?" You know, trying to be friendly about it. You know.
How many public broadcasts do you do a week?
Oh,
3, 4.
let's see. Well, you and Pastor Greg did my own radio show on Saturday and Sunday, and then 5 days a week I do a program on the Christian Satellite Network. So
Yeah, so while you
9.
might not be crazy on the Facebook and the Twitter, you certainly are what would be considered a public figure.
Oh yeah, definitely. It just, but here's the thing. First, they'll start off friendly. Oh, are you going on a cruise? Is that where you take this money out? But if you don't want to answer it, I had one of my clients say, "I'm buying $60,000 worth of none of your business," you know. But anyway, if you don't respond to the little leading question, then they come around and ask you, "What are you buying with this money?"
Mm-hmm.
And if you say it's none of your business, they say, "Well, we're not going to send the wire." How well do you know the person you send this money to? And then I put at the bottom there, we looked this company up, and they don't have that. Just totally blew my mind.
Yeah.
You can't have your money. Okay, this happened in January 2014, right after the new international rules went into effect. A guy named Stephen Cotton walked into the London branch of HSBC. He filled out a withdrawal slip for £11,000 that he owed his mom. The bank refused to let him have his money. It demanded that he show a promissory note from his mother. He said, "Are you nuts? You know, it's my mother. She loaned me money. She's not going to have me sign a contract, you know." And it wouldn't even let him withdraw £6,000. After a whole lot of arguing, they finally allowed him to take £4,500 from his own savings. Mm-hmm. Now, these arbitrary rules have been imposed in November 2013, right after the act. I'll show you here in a minute. But they didn't know their customers about it. They didn't notify them because a lot of people would have just gone and withdrawn their money. But if you try to close your bank account today, you're going to have a hard time. And I'll just say this: if you do close your bank account, don't just walk in there and do it. Write a check, put the money wherever you want it, leave some money in it, and then after you've got the majority of the money out, then go get that extra $100 and close the account down, because they will give you a hard time. There's been a variety of court rulings that set the precedents. Unfortunately, or fortunately in some cases, courts go by precedent more than they do the Constitution. But these have been what they called forcefully affirmed by European, British, American, and other governments, that when a depositor opens an account, he puts it in an unsecured asset of the bank. So, you know, if you make a loan to somebody, normally you get some security for it. You know, he puts his car up or whatever. These are unsecured loans, and the government can seize those monies to pay the bank's obligations. So you don't own your own account. Even though you've got a conditional IOU, you don't own it. Now, these legal changes that have been made make it easy for the government to confiscate bank accounts worldwide. But I bet your banker didn't tell you that, did he? Go and have a chat with your bank manager and ask them, you know, what's the chance of the government confiscating my bank account? Oh, no, that could never happen. Some cases, they don't know, and so they're telling the truth in a sense. You know, they're telling what they think is true. Mm-hmm. But the fact is, they can take it anytime. So when you make a deposit, you're loaning the money, and the bank becomes the legal owner. And here's some documentation on this. Richard Werner, he's famous because he coined the term quantitative easing. He's a really high up economist. He said many times in interviews that although banks are thought of as deposit-taking institutions that lend money, that is far from the truth. A deposit is not actually a deposit It is not held in custody. The direct quotes. And this is the key sentence here. In law, the word deposit is meaningless. So even if it says deposit on the deposit ticket, it's meaningless, because courts in various jurisdictions and judgments have made it very clear that if you give your money to a bank, even though it's called a deposit, it is simply a loan to the bank. So this is not right-wing nut job Tom talking here. These are, well-respected people. The guy that wrote the book, Banking Regulation of the United Kingdom and U.S. Financial Markets, he says the money we paid into the bank is known by the principal to be placed there for the purpose of being under the control of the banker. It is then the banker's money. He is known to deal with it as his own. He makes what profit of it he can, which profit he retains to himself. So they give you 0.5% on your savings account or 1% on your CD. They loan it out, 4% on a mortgage or 10 to 15% on a credit card. Since it's their money, they get to keep the profits. They don't have to give you anything except that little pitiful scrap of interest that doesn't even come close to covering inflation. Now, here's the actual document, and I think it's important enough that I put the link down there, and when we finish, I'll show this slide again. But if you go to fdic.gov, you want to write it down now, /SRAC/2012/GSIFI.PDF. You will get this document. It's a 15-page document, and it's an agreement between the Bank of England, which has been long known as the financial capital of the world, London has, and FDIC. So the two biggest, most influential organizations issued this joint paper on December 10th, 2012. Read it. I'll just give you a quick executive summary. The executive summary is like several paragraphs, but just a few things, the ones that are in white there, if you're seeing my screen. This is it was written to protect systemically important financial institutions. They call them G-SIFIs. Systemically important. What that means is the huge banks that are buddies of the regulators. Because if you remember, in the 2008 crash, big companies that had donated millions to Obama's campaigns were all bailed out, and the ones that didn't weren't bailed out. Okay. Now they got the authorities there. The authorities in the U.S. and the United Kingdom have been working together. Blah blah blah. Authorities would be the legislators, the people we elect. These are bureaucrats, appointed bureaucrats. They're making these decisions and making these agreements, and Congress, guarantee you, the majority of them don't even know that it exists or don't know what it means if they did. These need to be applied to the largest financial institutions. Again, they're trying to get small banks out of business. They've been doing this for a long time, forcing them to be bought out by bigger banks. The goal is to get it down to 3 large banks, 3 large insurance companies, 3 large IRA, what do you call them, the custodians. And because it's a whole lot easier to take over 3, merge them into 1, and then the government take it over, than the hundreds and hundreds of banks and insurance companies, thousands actually, and custodians. So then they keep putting this word all throughout the document without putting public funds at risk. Well, that sounds good, right? Nobody wants to put taxpayer money at risk.
Right.
But what they're saying is the government's not going to bail them out. We're going to bail them out. So if you have money in the bank, your money and the money of creditors will be the first to go. All right. And then they're protecting the institutions that they're related to. It focuses on a top-down resolution that involves a single resolution authority applying its powers, right? Again, taking over, making law of a financial group that is the parent at the company level. So they're trying to get as many companies under this umbrella so they can take it over. So they call it a top-down strategy. Now, they've been working on this and setting the groundwork for it for years. I mean, in 2010, the Dodd-Frank Wall Street Reform and Consumer Protection Act. When you see government come out with a new law, look at whatever they title it and realize that in 99% of the cases, the content is going to be the opposite of what they said. Like the Obamacare Affordable Care Act caused health insurance to double in price. So they didn't reform anything or protect any consumers. They protected the big institutions. So they want to create a single receivership at the top tier. And look at this, assign losses to shareholders and unsecured creditors of the holding company. That's us. We're unsecured creditors. And the Bank of England did similar things in 2009. They've planned this for a long time, and then they quietly put it into action. Remember in 2012, 2013, that's when a lot of banks were taking over other banks. So you had to sign new papers because it's a new bank now, a new name. Those that didn't, they would call you up and say, we've made some changes, so we have a new form, so here's the new rules. But you were sort of notified that you no longer owned your money back in 2013, because this was signed in December 2012. But they did it in such a way that nobody knows that it's happened. But it's all there. If you read the document, then you'll see. Now, the last highlight statement there in white, including the need to ensure sufficient loss absorbency at the top of the group. What that means is that the people the bank owes money to, us, the unsecured creditors,
Right.
and other vendors and people that they owe money to, get totally wiped out. And the people at the top, the people who've created the terrible financial instruments like these mortgage-backed securities that the banks have bought, they get protected, but we don't. So that's not what I call consumer protection, like in the Act of 2020.
Mm-hmm.
Now, again, just briefly, the unsecured debt holders can expect that their claims will be written down. In other words, chopped in half or 3/4 or quite possibly 100% to reflect any losses that shareholders cannot cover. Well, you're the shareholders. So you're also the unsecured debt holder. So if the shareholders can't cover the losses, then you become an unsecured debt holder. And they say some converted to equity, in other words, changed into stocks. And they had the authority to break things up, close down certain operations. If your bank is one of the ones that they decide isn't worthy, they just shut it down. The conclusion is this. In both the US and the UK, and remember, they're the two most financially sophisticated countries. So the other countries in the world have just said, well, they know best and they're following along. They just clone these laws. Legislative reforms already made or planned in response to the financial crisis provide new powers for resolving failed or failing banks, and allows them to take control of the company and impose losses on the shareholders and unsecured creditors. Again, not on taxpayers. Well, I happen to be a taxpayer. Okay. They're just saying that the government is not going to bail them out as it has in the past. It's now going to be on us. So the less money you have in a bank, the better. And that's just their final statement there. So let me just translate the whole 15-page thing for you.
Okay.
Unelected bureaucrats and international bankers from the two most financially sophisticated countries in the world have designed a completely new world order that they expect all other nations to follow in a crisis. And it would be a crisis that they cause. They've done it before. They'll do it again. They will force financial institutions into fewer and larger groups so that their so-called top-down policies can be more easily implemented. Depositors and creditors will lose most, if not all, their money. The developers of the financial schemes that caused the crisis of 2008, that will cause the next one that will happen in the next year or two, will be protected by being paid before the depositors and creditors. It's like if you have stock in a company and you have what's called preferred stock.
Mm-hmm.
It's exactly that. You get paid first, and the common stockholders get wiped out.
Right.
They are more important. These scammers, that put these schemes together, they're more important than the people that actually put their money at risk, because they're friends and associates of the decision makers. And in most cases, the decision makers are actually investors in those schemes themselves. So a huge conflict of interest, but they will protect these schemes and they will screw you. The people who caused the crisis and who will benefit from it will be in charge of managing the crisis. So that's like having a corrupt sheriff's department, and the sheriff investigates his own department. They don't do that. The FBI comes in with a police agency, but there's nobody coming in because they've written the law in such a way that the people who caused the problem will be in charge, and who benefit from it will be in charge of managing it. And they'll be in charge of telling people what really happened, which won't be true. So that's the strategy, or that's the document. Now I've got information here on how to get out of the different types of prisons. Are we out of time, Dwayne, or do you want me to go ahead a little bit more?
No. We still got another 15 minutes.
Okay. So the various different types of prisons, there's different strategies. In a bank, don't close your account. If you do it, you're going to have problems. Incrementally draw out your funds and put them in something safe. In my case, what I've done is I pulled my money out of the bank, and I keep a few $1,000 in there, but just for convenience. But almost all the rest of it is in precious metals. But you need to leave some in there in case you have auto pays or a debit card or something like that. Now, as far as getting out of retirement plans, annuities, CDs, these are three general principles. In the retirement plans, they say, well, leave your money in it because taxes will be lower when you're older. Is there anybody listening to my voice who believes that 4 years from now, much less 1 year from now, taxes will be lower?
Yeah, that's cute.
I mean,
That's cute.
next year, I guarantee you're going to see much higher tax rates. So if you're gonna take money out of something that you have to pay taxes on it, do it in 2021. If you wait till 2022, you'll pay a lot more. Annuities, they scare you into keeping your money in there because they will charge you withdrawal fee, number one, if you take it out before the agreed on time. But they also induce you to keep it in there by giving you guaranteed income. Well, I've asked a lot of people this that have annuities, or they have these crazy plans where, if you put a lot of money in an account, they guarantee you that no matter whether the stock market goes up or goes down, you're going to get a certain percentage. They make most of the money, but they promise you a certain percentage. and they guarantee it. So I asked people, well, what backs that guarantee? And they say, well, the insurance company, I guess. I said, do you know how many insurance companies have gone out of business? The biggest insurance company in the world, AIG, went bankrupt.
Oh yeah,
and had to be bailed out by the government.
They had to be determined too big to fail. So the government bailed them out.
What does guaranteed mean? Unless that insurance company can guarantee you that they will not go out of business, then their guarantee of the income is worthless. And they cannot guarantee you that. On bank CDs, I talked to a very sophisticated businessman. He makes a lot of money. He's got several different businesses. He's a pretty sophisticated guy. And he told me, I have a CD. I'd really like to pull it out now because gold is running up so quickly. I want to get it before it goes higher, but I'll lose 10% of my CD if I withdraw it before July. I said, no, you won't. He said, well, that's what the banker told me. The banker told him that, and he knew that he would believe that he would lose 10% of his principal. But they lied to him by not telling him the real truth, which is the only thing you would lose is 10% of the interest. And since the interest is so pitiful, who cares? By saving a couple $100 in interest, I mean, he could lose thousands of dollars in buying the gold he wanted to buy by waiting because the bank lied to him. So they try to scare you into keeping your money there by only telling you part of the truth. Yes, it's 10%, but it's 10% of the interest, not the principal. So why should you liquidate? Well, almost all, I would say all, but there could be something I don't know about. So I'll qualify. I'll say almost all managed retirement plans lose money to inflation. You can definitely do better on your own. I mean, I make a lot more money buying gold, and I don't have the risks of a bank going out of business, because the bank of gold is never going to go out of business. In 3,000 years, the purchasing power of gold has never changed. An ounce of gold has bought the same amount of, food, clothing, labor, whatever.
Mm-hmm. Right.
The danger of confiscation is real. Well, here's where people say, "Oh, you're crazy, Dr. Tom. That the government would never confiscate my retirement plan. Are you kidding me? This is America." Well, they confiscated 40% of the wealth of the country in 1933 when they confiscated all the gold. Of course, they didn't call it confiscation. They said, well, we're going to give you this $20 Federal Reserve note in exchange. But today that $20 gold coin is worth $2,000, and the Federal Reserve note is worth 80 cents because of the inflation they caused by taking us off the gold standard. So if you think that they can't confiscate your retirement plan, you really have a lot too much confidence in the government. Now, again, they won't call it confiscation. They'll say, we're doing this for your own good, because if you manage your own money, you could lose it all. Remember old Joe Sixpack down in Arkansas? He started day trading stocks, and he lost all his money. So for your protection, we're going to take over your account. So just remember, the government doesn't manage anything well. Social Security system makes about 2 to 2.25%. That's why it's always on the verge of going bankrupt. Okay, there's a magic number that you need to think about if you're stuck in a retirement plan, and it's 59.5. That's the age. If you're younger than that, then you're probably stuck, because in addition to paying the taxes, they're going to charge you a 10% penalty to take the money out. However, in some cases, and this you need to really think about and pray about, but in some cases it might make sense to pay it, because if you have a certain amount of money in that, and you're going to pay much higher taxes when you take it out in the future, because you have to take it out sometime. then it might make sense. Now, I'm not a financial planner anymore. I can't give financial advice. But if you ever want to talk to me and discuss your situation, I'll be glad to talk to you and give you the general principles that you need to consider. And my number is 561-753-5998. 561-753-5998. Just call that number up and make a phone appointment. Okay, now there are some exceptions to the 10% rule. Death, well, gee, I can save that 10% if I die, but it's kind of a pretty tough way, to save a few bucks, right? Total disability, not much more fun. In some cases, expenses for higher education or first-time home buyers, up to $10,000. So if you have $100,000 and you have a 10% penalty, you can get that wiped out. Some types of unreimbursed medical costs and health insurance premiums while you're employed. So they do make some exceptions to that, and I can give you more information on that if you need it. Getting money from a 401k. If you're still employed at the place that has the 401k, these are the rules, okay? First of all, you have to understand that every plan is different. If you don't know the particular company that's managing your money, call HR and they'll tell you. They all have different rules, but all of them will allow you to borrow. Well, I'm not a big fan of borrowing, but when you borrow your own money and you pay it back to yourself, even though you're paying interest on it, you're paying the interest to yourself. So if you can make more money than you're paying in interest,
Right.
then it makes sense. But it also makes sense because if you're able to take part of your money out and they do a confiscation of your 401ks, then at least that much money was gone. Mm-hmm. Some will allow special withdrawals if you're of a certain age. I'm sorry, did you have something, Joanne?
No, I was agreeing with you.
Okay. I like it when people agree. All right. So here's some lies that they will tell you, and I hear this from people every day. Well, I called my broker, and he told me it's going to take weeks to liquidate my portfolio. Bull. Okay. You can liquidate any stock in moments with a click of a mouse.
Unless it's some illiquid penny stock.
Well, yeah,
the
that's
market
true.
makers asleep at the wheel. Over the counters, you can run difficult. But if it's a major name brand stock trading at over $5, you're absolutely right. There's a market maker in place who his job is to make sure there's liquidity and an orderly market.
Absolutely true. But the retirement plans don't tend to buy those kind of stocks. They tend to buy the blue chip stuff. Mm-hmm. So just tell them, look, sell it all today, send the money to me tomorrow. Then they say, well, we can't wire funds to you.
They want a 3-day settlement.
Yeah, and they want to write a check and send it through the snail mail, mm-hmm. which is now slower than a snail. Mm-hmm. The post office is totally dysfunctional. So I tell them, absolutely, you may not put anything in the mail to me. I want it wired. Well, we can't do that. Well, I wired the money to you, and you're telling me that you as a financial institution can't send a wire. Let me talk to your manager, okay? If they stick their feet in and they just won't do it, make sure they overnight you the check. Do not allow them to mail it to you, because I've had it take a week for a letter to get from California to Florida. It's the post office it's totally lost it since all the election fraud stuff. They'll also tell you that they're required to withhold 20% of your money and send it to the IRS to make sure your taxes are paid. That is another lie. There's only certain people that they can do that with, but they want to do it because they withhold the 20%. They hold on to it as long as they can get by with. They make the interest on your money, then they send it to government, and the government makes the interest on the money till next year. You should have that, even though it's a small amount of interest, you should have the money in your hands, and you can make something with it. And if you just buy bullion, which is immediately liquid, as much as gold is going up, you would probably have your tax money plus another, 20, 30, 40% next year. So you make money on the money. So don't let them withhold it.
Another avenue that some people may or may not be aware of is this new term DeFi, or decentralized finance. If you own major cryptocurrencies such as BTC, you can borrow against your BTC. You can get up to 70-80% of the value at a pretty reasonable interest rate. This requires no credit check, no income verification, no nothing. You simply transfer your BTC in, and they will loan you in fiat currency, whichever fiat currency you want, and you can then take that fiat currency and turn right around and buy more BTC if that's what you want to do with it. And it's going to diminish each time, but then you can, the BTC you just bought up, you can now go DeFi that, borrow against that. It's a way to, if you truly have a bullish outlook on the future. I'm not recommending anyone do this. I'm just telling you that it's an avenue that you should do your own due diligence. You should do your own research. But you can, and it takes minutes. You go to a website, you verify that you own the coins, you transfer them in, bang, they pay you online. It's almost instantaneous. You turn right around. You can buy more of whatever you want, and then you can borrow against that. Eventually, you'll whittle it down to where you can't borrow enough to buy anymore. But 10 years from now, a lot of people will be telling stories about how they used that little known mechanism to triple and quadruple the amount of money that they earned or lost in crypto through the use of DeFi. It's a whole new world. Most people aren't even familiar with the term yet, but it's becoming a more common term. So anyway, just thought I'd throw that out there so folks can do their own research.
That's fascinating. And you see the interest rates are pretty low. What do they typically charge?
About 8%, I think, on average.
Okay. Well, that's, you can leverage your money tremendously.
Oh, yeah, you just leverage over and over and over and over. It's some people have gotten real well doing that. But you need to vet the firm. You need to look at track records. You need to really make sure you know who you're dealing with. There's a lot of fly-by-nights out there, but there's also very well-known names like Gemini and Coinbase and others that have been around and where they offer DeFi services. No credit checks, because it's a collateralized loan. You're transferring
It's like getting a mortgage. They have the house as their collateral.
No,
yeah.
Exactly.
Well, we'll have to talk more about that when you call me today, because I want to. That's very interesting. Okay, when they tell you it's going to take weeks to get your money, look, I have people all the time that, and the stock's liquidated one day, and the wire is sent the next day. So it can be done, but you have to do it right. You have to insist on expedited service. Otherwise, it will sit on somebody's desk for 2 weeks before they even act on it. And it'll cost you $30 or whatever. Pay it. Definitely worth it. We can't wire your money. Well, it's against our policy. Well, my policy is that I get my funds in a timely manner, or I can start making some calls to the SEC and the State Banking Commission. I'll pay you a wire fee, but you have to send my wire. I'm the customer. We can only mail checks. This just allows them to delay and then once you get the check, it's going to take time to clear. So don't let them send a regular check. Insist on an official check, which from a financial institution is the equivalent of a cashier's check from a bank, and have them overnight it and send you the tracking number so you can see when they actually send it. We have to withhold 20%. This is called backup withholding. Check it out. Just go search yourself. It's easy. It only applies if you accidentally gave an incorrect taxpayer identification number, your social security number, and it doesn't match up with what's on record. If you're delinquent in your taxes, or if you've been notified by the IRS that you are subject to backup withholding. Otherwise, these are the magic words. I am not subject to backup withholding. You may not withhold taxes.
Right.
And they really don't want to hear this phrase, transfer me to your compliance officer. Okay? Because the compliance officer is the internal cop. Always ask everybody at the beginning of the conversation, before it gets difficult, for their name. Most of them won't give you their name, just their first name. They'd say, well, I want your employee number. Okay? And then be firm. Be the squeaky wheel. Be polite. Don't scream and yell, but be firm. It's your money. You have the right to it, and you have the right to get it in a timely manner. Now, here's how you can have your cake and eat it too. You can eliminate, possibly, or at least lower the effective taxes on funds that you withdraw from your retirement accounts simply by doing what most people do. Calculate your taxes, put them in the bank, don't touch them until tax time. That just makes sense. I totally agree with that. Everybody should do that. But which bank? All right. You want to put it in the bank of inflation or the bank of gold. You put it in the bank of inflation, you're making nothing. You're losing purchasing power. And if you end up not having to pay so much tax as you put aside, that money's going to be worth less as you have left over. But if you put it in the bank of gold, totally different story. Now, the bank of gold is your safe in your house, all right? And what you do is buy bullion, which is always immediately liquid. And if bullion continues on its current trend, I think by next year we're going to see it at least back to its previous high, 21. Then by the time you pay your taxes, you'll sell your bullion for enough to pay the taxes and still have a lot of bullion left over. So why don't we just end this here and pick it up next week?
That sounds good. Thank you so
All
much.
right.
Always enjoyable on every Thursday, and I'll talk to you today, and I'll see you next Thursday.
Okay, God bless everybody.
All right, brother. God bless. All right, guys, we're going to have to wrap this up for now. If you want to learn how to trade E-mini futures, or if you've been struggling for years to learn how to trade E-mini futures, you can, continue down the same path, which will always take you to the same place. The same recipe always bakes the same cake. Or you're welcome to come over and trade our alerts and make money. Or you can come over and trade our alerts, and we'll teach you in the process how to find these windows of opportunity yourself. It's not some complicated, convoluted, impossible to understand, bloated mess. It's a very streamlined, elegant strategy with a minimum of indicators. You just need somebody to teach you how markets flow, how price flows. And that's something that we do. So, when you see a thumbs up, that's an alert that had a potential profitable outcome, plain and simple. Red X is a stop out. When you see the Z's, that means it just never triggered. So I don't know how you've done so far this week. Okay, we are now in week 146 of Logic 247, where on any given week we average 20% of our alerts getting stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure, which I teach you, and a 3-step methodology that I also teach you. Last week, the markets were extremely kind. Only 5% of the actionable alerts were stopped out. Now, those are just the logic. That doesn't include the concierge trade alerts, which work in concert with the logic alerts. This week, so far, as I showed you earlier in the show, since Sunday night at 6 p.m. Eastern, we've issued 38 alerts, 2 never triggered, still waiting on 2, 34 actionable, 6% stopped out. Another kind week. The average over 146 weeks, 20% do get stopped out because the market does something other than the next high probability thing. What we teach you is to be able to look at any chart, any time frame, any market, and within 20 seconds, you can know what the next high probability move is. 20% of the time, the market does something other than the next high probability move. Trading is not easy. If it was, everybody would do it. But when you have a teacher, when you have a definable edge, when you have unlimited one-on-one mentoring, when you have live daily training every day, it's still not easy, but it can be simple. And it could not be more affordable. Lifetime membership right here, Emini, futurestrading.com. One click over there, Valerie will get you out all the information you need to become a lifetime member, and you'll be in the members only workshop with us tonight. So we close out with our good word for the day. Proverbs 10:8. The wise are glad to be instructed. If you want to walk in God's blessing, stop making excuses and take responsibility for your life. The Bible says, the wise are glad to be instructed. Fools fall flat on their faces. The ability to accept responsibility is a hallmark of character and maturity. More importantly, God can't restore you until you acknowledge and turn from your sin. Nowhere in Scripture does God excuse our sin because of someone else's behavior. The Bible says in Proverbs 24:12, He will repay all people as their actions deserve. When you keep placing blame on other people, you never reach the place of honest responsibility, where real transformation begins. Ultimately, blaming others and trying to shame them into change is a game that's just a waste of time. It might make the other person feel guilty, but it won't change anything. However, it will keep the spotlight off ourselves and what is causing us to experience anger and frustration. Until we turn the light of Jesus on our own behavior, we won't succeed in lasting change within. Blaming others is all too often just a way of avoiding the truth about ourselves. Jesus said that knowing the truth will set you free in John 8:32. It may make you very uncomfortable at first, but it's the thing that will truly liberate you. And hiding from it doesn't make it go away. In fact, until you're willing to face your mistakes, you'll keep having problems. Is that really how you want to live? Well, then get honest with God and let Him help you correct the things in your life that are out of order. And that's our good word for the day. All right. Coming up here in just a few moments on this same Bat channel, Michael will be holding a meeting. I'm sure all of you already have your invitations. He'll be talking to you about all the things that happen, in the live training room every day, the methodology and the strategy. And of course, if you have any questions about the bigger picture stuff, the alerts, you can always reach me in Telegram, in the discussion group. You can also send me a private message at CFRN1, the number 1, at CFRN1 in Telegram. And if you haven't hooked up Telegram, then you're missing 90% of your trial experience, because what you see in the room and what you see during this afternoon broadcast is only about 20% of what actually goes on inside of CFRN. Telegram.org. It's fast, it's free, it's secure. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.